Hi traders, and welcome back with another Forex Weekly Update. My name is Gary Fichardt and I'm going to be talking about what happened this weekend. It was insane! Can you believe that the Eagles actually lost the game this weekend? Alright, well, I'm not talking about the Eagles. I'm actually talking about the drone strike in the Saudi Arabia. This is huge. The oil strike that took place this weekend has created a big jump in US oil on Sunday evening. We're going to go ahead and take a look at the market and see exactly what's happening. Now, this is the deal. A lot of you might think that this is actually an upside move in US oil, but we have to go ahead and look at two levels that are really, really important. And also, it's setting up with an irregular flat. If you don't know what that means, you want to go ahead and pay attention to what we're going to talk about today. Also, we're going to talk about the US rate decision coming out this weekend. Big news, right? We're going to go ahead and take a look at that. We're going to take a look at the pound rate decision this week as well. We've been seeing some upside move in pound over the last few weeks. It's been recovering pretty good, but there's still a lot of details on the table we're going to go ahead and talk about. We'll speak about that right after this. Alrighty, traders, well, welcome back and welcome back with another weekly update. Yes, the Eagles did lose this weekend, and I'm pretty ticked off. I'm not going to go ahead and talk about that because I pretty much want to go ahead and forget that this weekend ever existed. Man, we were robbed. Okay, enough about that. Let's talk about the market. Well, if you take a look and see what's happened this weekend, we had the movement in US oil at the open due to the strike, and let's just take a look at the chart right here. Now, I'm going to go to US oil, and I'm going to go ahead and take a look at the movement, and I'm going to go to a 1 hour time frame, and you can see here at the open, this is right here, this big candle that we're seeing here go straight north. This is the candle right here that a lot of us did not account for. All right, there's a lot of that news that took place this weekend that traders just didn't really expect in the technicals, right? Now, the market jumped up, obviously, because of what happened over the weekend, but we're going to go ahead and take a look at the larger time frame, and I'm going to go ahead and move it to a daily time frame right here. Now, on the daily time frame, if I actually look at the way the market's set up right here, it's important that we identify a couple of levels right here. First, number one, as I compress the charts a little bit more right here, in fact, I'm going to try and see if I can compress it a lot more. Maybe I need to go to the weekly to be able to pull it up. Oh, here we go. I'm going to pull out some of the details right here. And what I'm looking at right here, traders, is two things. Let me see if I can see it better on the weekly. You know what? Yes, I can. Okay, so this is the deal. So what we need to do is we need to think about this from a technical perspective, but also take a look at this from a wave count. Now, if you know anything about Elliott wave, you know that the market moves in waves. And the market could also go ahead and correct itself based off a pattern, right? And so if you look at the larger swing, this is a wave one down here, and it's coming off this high at the top right here. Now, the market's gone ahead and rallied up, come down, hasn't gone ahead and retested this level at $42 a barrel. It's found support there, and so we could see this market going up and taking out this wave 2 high, which is predicted at around about $66 a barrel right here. All right, so it's around about $66 a barrel. Now, if it goes up higher, we could get to about $72 a barrel. This is if price is going to continue to move back up. Now, this is the important part right here, traders, that you have to understand. The market moves in patterns and moves in waves, but there could be an alternative move that we may need to look at. All right, even though the market may seem like it wants to go ahead and rally up towards that $72 a barrel, the question here that a lot of traders are asking right now is, could this just be a smaller structure that's taking place right now? And this is what they call an irregular flat. Let's take a look at the charts. So if I go ahead and remove this out the way, and I go ahead and pull in this swing going down right here. So here we have the market moving down. You can see how the price comes back down and tests that level there around about $51 a barrel, right? And then the market goes, so the market went up, then came down to test that level, and now it's gone back up again, taking out that high. This is what we typically see as an irregular flat, which means, traders, that the market may be just doing something like this. All right, hang on, wait a minute, I did that horrible. Let's do that again. So it goes up, comes down, tests the low right here, then goes up and takes out the high, then can look to continue to work its way back down. That's an irregular flat right here. All right. So this is what when I refer to as an irregular flat, that's what we're looking at over here. So with this irregular flat, with the inside structure in play, there's levels that we need to pay attention to, and this is the level we need to pay attention to. All right. We need to pay attention to this level right here. If price takes out $66 a barrel, it's going to go to $72 a barrel and then fall. All right. If price stays below $66 a barrel, which means if we get any sort of bearish indication right here below $66 a barrel, guess what? We're heading south. And we're going to go all the way south towards, oh, let me go ahead and kill that. We're going to go all the way south towards the next target, which is down here. Now, this is a weekly, and it's huge. This is the weekly time frame. And the weekly is indicating that price could move all the way back down to this level right here, which is just below $24 a barrel. Now, whoa. Before you go ahead and shoot the messenger right here, let me go ahead and pull up the daily, because we're looking for some more inside targets, right? Some targets that we can relate to. So if I go ahead and pull this in, now I'm looking at, here we go, and I'm going to zoom out a little bit right here. All right, there it is. So what we're doing is we're looking at this. This is the wave 1 right here. This is how price has moved up. All right, looking at that irregular flat. If price stays below this level right here, which we said was $66 a barrel, we're going to see price moving back down to all the way to this level in the short term, well, in the midterm, and that's around about 42, let's call it $41 a barrel right here. That's something I can relate to. That's something I can see happening. But what we have to do right now, traders, and this is why this is critical, we need to be patient. Why? Going in right now and starting to sell the market right now may not be the smartest idea. Thinking about, for instance, like pound Canadian or Aussie Canadian. I'm referring to the Canadian crosses trading against the majors. I'm not saying necessarily oil, because we've had a lot of traders last week that made a bunch of money from oil. But right now, with the news that's come out, clearly there's a change of sentiment in the market, and we need to adjust that. But could this be just temporary? Could this be temporary bullishness in the market, a change where this is going to take a lot of traders that were bearish into a bullish upside move and thinking that the market's changing direction? But if we are correct, which I think we may be, all right, that this is in fact an irregular flat setting up right here, we're actually heading back down south. Now, traders can think about selling the market short with stops above $66 a barrel. If it fails, then go ahead and trade it. Wait to go ahead and trade short again when the market gets to about $72 a barrel. All right? But this is the deal, right? For those conservative traders out there that want to be a little bit more conservative, they're going to have to place a more conservative trading approach, which means this. Not all the currency pairs that are trading against the Canadian dollar are setting up for a sell or a buy opportunity. What I mean by that? Well, what I mean by that is some of these pairs have been looking for a correction move, like pound Canadian. Pound Canadian had rallied up, hit resistance, and was looking for a dip before it starts rallying again. You know, you may see it with other pairs, but you have to wait for, or at least take a look at each currency pair, and then look at the technical analysis as where the market's setting up on that particular chart will decide whether or not that's a good or bad trade. Now, let me go ahead and show you some details of some actual setups. Let's go ahead and jump into some Canadian crosses, right? And I'm going to pull up the Aussie CAD first. I've got the daily chart open over here, and I'm looking at the daily right here. Now, traders, I am the first person to say that if things aren't setting up good, if you're not comfortable with it, stand aside, get the heck out of Dodge. But this is the deal, all right? This is what you need to think about. We were inside consolidation. We were waiting for the breakout. We've just had the breakout right here in the Aussie CAD. It's come back down with, of course, the news coming out over the weekend. It's coming back to retest the support level. If we stay above the support level, if you have any bullish confirmation right here, traders, it's going back up, and you can see the market rally. So we could be in for a nice Aussie CAD rally. Now, before I go ahead and start with that, let's take a look at the data on the news. Tonight, we have we have some data coming out for the Aussies. We've got the monetary policy meeting minutes. Depending on what says, what comes out in the verbiage there could depend on whether the Aussie goes bullish or bearish. Looking at the setups, looking at the current setups on the Aussie CAD, we could have a little bit of a bearish move and then a continuation of a rally. All right, that could happen on the Aussie CAD. Now we also have some other data we spoke about. We've got CPI here in the for the pound. Big data coming out on Wednesday, CPI, and this is just before they start announcing their rate decision. You can see right here, down here, we have the rate decision for the pound. On the Thursday, they're expecting to keep the rates unchanged. All right. Now that means that all of this data right here, CPI, which by the way is forecast to be a little lower at 1.8%, could the inflation be an issue? Could inflation be an issue for the pound if they're going to keep the rates unchanged? That's a question they're going to have to deal with on Thursday. Then we've got crude oil inventories coming out here in the US on Wednesday. with the Saudi attacks, could this be an influence right here if we start seeing the numbers come out a little lower? We'll have to wait and see what happens on Wednesday. Also, we have the FOMC. Very excited about the FOMC. They have the federal funds rate that takes place on the Wednesday at 2 o'clock. All right, exactly 2 p.m. Eastern Standard Time. They are going to cut the rates 25 basis points. We know that. It's already probably, most of it's been priced in. The question here is, what comes out in the press conference? Are they going to talk about further cuts this year? If they are, how frequent and how much? Those are the things that's going to move the market. I believe this may be already priced in. Now, me and Chris Pulver have actually a live session taking place on the Wednesday. I want you to join us. So make sure that you go ahead and check out my next video. It's probably going to be tomorrow about the Euro Aussie prediction. I'm going to talk about the prediction. I'm going to also go ahead and talk about a system, because I had a couple of traders ask me, Big Dog, this nice little bearish move that we had in the Euro Aussie dollar, I missed out on the whole opportunity because I wasn't around the computer at the time. I'm going to show you a simple way to be able to get it from the computer, set things and leave it and let it run, specifically when you find direction. Because the most important thing, traders, the most important thing that you want to identify when you're trading is direction. Once you know what the overall direction is, you can then decide when to sell, when to buy, and pick up those runs without actually being in front of the computer. By using automation, that's a great tool in trading. Let's get back to the charts. Now, we've got the FOMC statement and rate decision coming out this week. We also have, of course, Bank of Japan. Boom! We've got them coming out this week as well, talking about monetary policy well, at least releasing the monetary policy statement. Of course, there will be a press conference after that, or very similar time. And then we have later this week. Let's take a look at you're right here on Friday. Friday, we got a little bit of data coming out, just the core retail sales for Canada. Not a big deal that I'm going to be focusing on. But those are the core details that I'll be focusing on, as well as, let's not forget about the Aussies right here. We've got employment change and unemployment rate as well. That's going to be a fact as well to depend on whether or not we see a rally or dip in the Aussie dollar itself. Oh, man, a lot of data coming out this week. All right, now we've looked at the Aussie CAD. Let's jump to the Euro CAD. Now, again, traders, from a technical perspective, remember, everything's based on technicals. And I said to you, let's look at from a technical perspective. If I look at the charts on the Euro CAD, Euro's been weak, right? And if Euro's been weak, then any sort of news that comes out with the trading currency, which is the Canadian dollar, is going to create a much weaker move on Euro CAD. So we've had some strong data out in US oil, or at least we've seen some, sorry, not strong data, but we've seen some strong movement in US oil that's created a strong move in Canadian dollar. And the Canadian dollar moving against the euro, with the euro being weak as it is just going to escalate that move. And we've just seen it right here on the charts. So if you look at this from a technical perspective, it makes sense to want to go ahead and start selling US dollar CAD, right? Oh, sorry, Euro CAD. So it makes sense to go ahead and do that. Now, the question here is, and this is the thing that traders are asking themselves, how far, sorry, I'm moving the charts around a little bit, but I'm just making sure it's positioned right, but how far can the market move before I start seeing support? All right, because that's important, because if you're getting over here and you start selling, how much profit can you make and how much you're risking? Remember that. That's always going to be my question, right? That's always going to be the question I'm always going to ask is, how much money can we make on this trade and how much am I risking? Because you have to keep asking that question. And if you don't ask that question, then what's going to happen is you're going to get into trade, you're not going to be able to get too much on that, and you're going to have too much exposure to the upside, and you don't want that to happen. So the deal is this: how much profit can we hit? Well, you see, this is my third wave right here. I did not see price come to that third wave, which means that there's a little bit of movement down here. We've got about, let's measure this up. Let's take a look here. We've got about 150 pips to go. So we've got about 150 pips to go before we hit support, and then the market's going to start bouncing back up again. Now, this is the deal. We can see about maybe a 200, maybe a 190 pip stop. So think about it. 190 pip stop, all right? 190 pip stop for a 150 pip possible gain on this trade. I don't think that's a good deal, all right? Specifically not on the daily time frame. Now, if you want to go ahead and break it down on a smaller time frame, which we're going to go ahead and do, we're going to go to the 1 hour chart right here, and we say, okay, well, let's take a look right here, because if we're going to be selling on Euro CAD, right? If we're going to be selling on Euro CAD, where should we be selling and where should we put our stop losses? Well, I'm always going to look at my wave cycles, all right? And I'm always going to look at to see where we are positioned inside that cycle, because if I'm at a very key support level, I'm not going to go ahead and want to get in that trade. Now, if I haven't told you already, I'm going to tell you now. I'm a trader that loves to get in on the second wave of an Elliott wave structure. Second wave is the biggest move that you're going to get, because what happens? You're getting in on the second wave and you're chasing after the third wave target. And that is the strongest and the longest wave structure that you'll get in the Elliott wave cycle. Now, this is the deal. If we go ahead and take a look at the chart and we look at this right here, here we have wave 1, 2, and 3. Guess what, traders? Here was your opportunity here. The market's gone. It's going to get back to support. Now is not the time to get in. You're going to get a bounce. And this is the bounce that we're going to see right here. I'm going to go ahead and pull my smart waves. I'm going to put it in there. You can see. Can everyone see right there that the market's come down to my 1.6 rate, confirm my third wave? We're going to see some sort of correction right here. Maybe it's not going to be as much, but there's going to be a little bounce. When it comes back and starts selling off, that's the time to start looking to sell. Now, wait a minute. I want you to also look at this, because we're not done here. Let's just say, for argument's sake, that price does want to go ahead and move back up, right? So let's go ahead and say that we have, this is the wave structure that we have in place. Let me just see what I've got here. All right, my bad. All right, so we've got the wave structure in place right here, right? And I'm going to go ahead and do this. I'm going to say, let's say price does move up there. And then price wants to move down to my fifth wave right about there. What have we got in on the deal here? Well, firstly, where am I going to place my stop loss? Stop loss is always great behind the wave 2 if you're trading the wave 4 retracement. Now, if I'm going to place my stop loss right here, then how much am I risking? And if this is going to be my target, how much am I going to gain? Doesn't look like a whole bunch, right? So which means that traders, when the market goes up here, and then it creates a bearish formation at the top right here to confirm that we're heading south, that's then the time to go ahead and sell with my stop losses tight, because I'm only going to be chasing after so much profit. All right, that's my profit potential. And if I look at this from a management perspective, then I'm looking at placing. Well, let's just take a look right here. I'm looking at about an 80, maybe 90 pip grab on this, right? That's about all I got. So I got to make sure that my stop loss isn't more than 40 pips. It cannot be more than 40 pips. If I've got a more than a 40 pip stop and I'm only chasing after 80 to 90 pips of that trade, then my risk reward ratio is going to be too whacked out. All right, it's going to be like I'm risking a 1-to-1, and I'm not scalping. I'm not trying to scalp in this pair, right? I'm trying to grab as much profit I possibly can, so that I don't have to worry about losing on a trade. Because if I can get in on trades that are going to give me a 1 to 2 risk reward ratio or a 1 to 4 risk reward ratio, that means I can lose between 2 and 4 trades in a row before I break even on the next trade. And I'm okay with that because I know that's the type of trading strategy that I'm following. But the deal is this: if I'm looking at the setup right here and I've identified that this is where I want to look to enter, and we're going to get a correction, and when we do, I'm going to look to sell. I have to make sure that whatever the profit is down here, and it looks like we're going to chase after just about 145. I'm going to go say 145.20 to 145. That's about where we could see the market bouncing. All right. So 145.20 to 145 is where we can see the market bouncing around. Now, if I go to another chart, that's the Euro CAD. Let's go take a look at the Pound Canadian. Pound Canadian set up a little differently, all right? And the reason why the Pound Canadian set up differently because the Pound Canadian is in a fourth wave correction down, which means it's going to go bullish on the upside move. So unlike the Euro that we have, and I just noticed that my screen's not showing right here. Just give me 1 second right there. I should come back up again. There we go. All right. So I apologize for that. So the thing is this: with the market setting up with a different wave structure, okay, and the wave structure that we're seeing at the moment right now is that the fourth wave is actually the retracement move, and the fifth wave is the extension. Now the Euro CAD was set up to go south in a bearish wave structure, but the pound's actually set up to go bullish. So this little bit of bearish movement that we had right here is creating a new opportunity for us to get back into the pound and start trading pound long on the fourth wave entry point. Now let's go take a look and see what we've got going here. So if I look over here, I do see that we have a third wave target up here. Here is my third wave. So I'm expecting price to move up right about here. It's probably going to go ahead and complete the fifth wave, and that's going to be my third wave entry exit point right here as well. So I can see just because we missed the third wave target up here, it looks like price could move up a little higher for us. So as soon as we get a nice bullish confirmation right here, we're looking to buy long. And if we're going to be buying long on this, then I'm looking at around about, let's see here, 300 pips to the upside. So that's the upside potential on Pound Canadian. Just wait for the opportunity, and once it presents itself, we can start buying in. Now, traders, I'm not saying, let's just make sure we're clear on this, all right? I'm not saying let's go ahead and just jump in on a trade and just buy. I'm saying wait for the opportunities. Now, in tomorrow's video, I'm going to be talking about how we can go ahead and use a system to be able to identify direction. Just as an example, this is a bullish direction that we've got, right? How do we take this and deploy a system in that direction and just let it run? Well, firstly, number one, you've got to have a trending system, because if you're looking at a trending strategy, then use a trending system. Now, that trading system can also be a scalping system, which means an intraday trading system. You don't have to go ahead and trade week on week on week. You can go ahead and trade day on day on day, right? You can be a day trader if you wish to be. But the thing is here, we're going to go ahead and take a look at trading opportunities that are going to give us buy signals on a system that is a trending-based system. Because if the market's not going to go long and it's going to go ahead and drop further down south, we don't want to be in the market. We only want to be in the market when the market systems, or at least the system indicates that the trend is now starting to take off. That's the system where we want to go ahead and trade. Now, this is the Pound Canadian right here. Let's go ahead and take a look and see what else we've got here. And this is what I want to talk about, New Zealand CAD. New Zealand CAD, just like the Euro CAD, New Zealand CAD is showing us a very strong move to the downside. And you can see it right here, like Euro CAD, we're heading south, all right? But the opportunity, traders, was right here. That's where you start to look to sell short. This is where we're supposed to start thinking about selling short. Not down here, certainly not there, because that's when we're expecting price to go back up again. And so this was the opportunity right here. This is where the signal came to say, traders, let's go ahead and start selling short. Everything on my system told me it's selling short. In fact, if I go to my 8 hour, check out the 8 hour. The 8 hour right here is also, and this is my sentiment strength line, my sentiment strength line said, big dog, sell right here. There's the sell. And it's still bearish at the moment right now. It's still telling us to go sell. And we're chasing after, yes, this third wave down here, and then eventually down here, we're chasing after our fifth wave. So price is certainly on a downslide on the Euro CAD. We should continue to sell on New Zealand CAD. So Euro CAD, New Zealand CAD, both of them are absolutely our sellers at the moment. So if we go ahead and make a decision as to what we're going to do, whether we go ahead and trade based on swing trading or based on scalping, the most important thing, traders, that we have to identify is we have to identify what type of trader are we and what type of trader do we want to be this week. With the data coming out this week, quick grabs in the market, nice little trendy trades would be absolutely sweet, especially those intraday trades. In and out, take your profit, get out, wait for the details of the fundamentals to come out. A lot of news out this week, but I don't think it's going to really create a big change in the actual directional trades that we're in right now. Now, when I say that, I have to add this as well. When I say the market's not going to change the directional bias that we're in, what I'm trying to tell you is that when the markets create this type of swing action, and the market's on its way down, we know we're bearish. I'm not saying that the market's not going to go and do spike up like this and then continue to go down south. There may be some interruption to the trend, right, where the market goes up and down, and spikes and maybe gives a bit of whoopie lash in. It happens a lot of times. It does this and then it goes this and chops it goes a little choppy like this and then just continues to move down. I think the overall trend, the overall bias that we have on most of these currency pairs are actually pretty much set up. Now it comes down to how we can actually trade this, that we don't get whipsawed in and out of the market and take some losses while the trend's still holding. And that's the most important right there. This is why bringing in systems that are going to protect your position as the market moves in your favor are very important, because we cannot be in front of the computer 24/7. Listen, traders, I've been trading over 25 years. And I'm telling you right now, you cannot be in front of the computer 24/7. And a lot of the times when the market moves during the morning session and you're not around the computer and you go ahead and you don't protect that position, you're giving away money. You're giving away hard-earned capital that you want to go ahead and capture on. So you have to go ahead and incorporate systems. We'll talk more about that tomorrow in any case. Traders, well, this is pretty much the update for this week. I think the big thing this week is going to be paying attention to, of course, the Canadian crosses. Look and see how this news that came out over the weekend is going to affect the overall direction. I believe it's just a fake out, but I am going to be watching those levels. Remember, $66 a barrel, $72 a barrel for the next move. And if the market stays below $66 a barrel on US oil, then I think it's going to be a fake out. I think the market's going to go ahead and reverse, start heading south to about $42 a barrel. But we'll wait and see what happens. Again, if it breaks out, change your plan. Then we're looking at $72 a barrel. We'll start thinking about selling at that point in time. Traders, there's also news out there again, and I'm going to go ahead and take a look right here. We've got the news coming out this week. All of this news is important news that we need to pay attention to, right? We need to pay attention to that news. But also very, very, very importantly, we know that with the news that's just come out recently, we also know that there are a whole bunch of other news and fundamental announcements that are going to hit the market, right? I mean, we're still not out of the trade war. We're still not out of Brexit. We're still not out of central banks easing. In fact, this week is going to be no different as the UK Supreme Court rules on Boris Johnson's decisions, as well as, of course, the talks continue with the US and China. It's going to continue this week, following the rejection rumors of the limited trade deal that was on the table between US and China. And then don't forget about these central bank decisions. All right, these central bank decisions are going to take place this week. We've got pound. We've got the U.S. central bank that's going to make a decision this week as well. And these are definitely going to be price movers, going to move the market in different directions. So we have a whole bunch of data that's coming out that's going to reflect what we're seeing here this week, and we're going to see what's going to happen in the technicals as well. I'm excited, man. This volatility is great. I embrace it, and I'm looking forward to this week, and I'll see you in the next video.